Good afternoon, or good afternoon for some of you. Thanks a lot for having me here with you for this summit. I think for this slot, I'm going to try and share with you a few stories and ideally best practices and things you can try in your organizations around the use of data in order to develop improved customer engagement and primarily to do this through digital banking services. So my name is Olivier Berthier. I'm the CEO and co-founder of Moneythor. I'm going to present to you a little bit what we're doing at Moneythor, but primarily focus on what we see in the market today in terms of the demand from customers, as well as the tools which are available in order to develop this concept of proactive customer engagement. So a few words about us. First, we're Asia-based, headquartered in Singapore, software company, exclusively focusing on enabling financial institutions, banks, but also fintech firms, enhance their digital services and add a layer of personalizations and actionable content to those services offered to their customers, whether they are consumers or SMEs. And with a concept very much centered around delivering money management capabilities with personalized insights, contextual recommendations, and actionable nudges. So using data for us in order to enhance digital experiences is pretty much at the core of what we're doing as a company. We were founded in 2013, head office and product center here in Singapore. We also have offices in other places, basically following the time zone of our clients. And the characteristics, which is very dear to my heart also as the CEO, is that we're self-funded, debt-free, and profitable. You see on the right-hand side some of the banks we work with, some of the institutions we work with, primarily anchored in Asia-Pacific, from Singapore, Hong Kong, Malaysia, Australia, New Zealand, and other countries as well. So what are the problems which we're seeing financial institutions in the region focusing and the pain points? So we're looking really at them in two dimensions. The first perspective is from a customer standpoint, and we're all customers of our financial institutions. And I think it's fair to say that we could do with a little bit more assistance online from our banks when it comes to helping us improve our finances. Particularly in a day and age when our digital expectations are growing, our appetite for personalizations, for automations are growing as well. So basically, an issue there to address customers' demand when it comes to enhancing financial wellness for the end users. Now, if we look at this from a bank's perspective or issuers as well, because it's actually slightly broader than banks, there is an issue to increase loyalty. There are more and more players. There are more and more entities which are competing for customers' attentions, particularly when it comes to helping them implement their financial needs. So increasing loyalty, but at the same time, improving digital engagement through their digital channels, increasing the stickiness of those mobile banking, internet banking services which are provided has become a particular challenge, which most of the banks in the regions are focusing on heavily. Now, the context of those problems, and I'm going to really try to cover them and to come to this use of data in order to drive more engagement in three layers. The first foundational layers, which I think is worth mentioning, and it's coming as a wave of significant changes in our industry in the region, is open banking. So there's increased competition. There's also additional opportunities which are coming from open banking. And it's really setting the stage for the need to use data more proactively in order to create that extra engagement for digital banking customers. So I'm briefly going to cover open banking because we're really seeing this as an enabler and as one of the challenges of the industry coming in the region as well in the fourth. The second layer is the fact that most organizations now have realized the benefits of improving digital engagement in their digital services. I think it's widely covered by industry commentators, but financial institutions as well. And the digital engagement and increasing digital engagement as an additional KPI that bankers are trying to address has become a very important aspect of the recent development in the recent years. The final part is more the solutioning behind, is that I think it's fair to say that data analytics and other kind of user experience and behavioral science techniques have now matured. They're broadly available. There are skill sets being available in the market as well. They are the tools that can empower those engaging data-driven conversations. So I'm really going to have a quick look at some examples of how data can be used and how those fairly well-known techniques nowadays can be used to deliver this value, illustrating with some aspects that we've seen with our own solutions and our own clients. So first things first, open banking. I think it has arguably started in Europe with the Payment Service Directive number 2, PSD2. But it has actually been rolled out now in a number of countries with different types of approaches, either regulators-led, really the government having an agenda around often financial data portability, around increasing competitions and driving the initiatives and mandating banks to open their data assets. But in some other parts of the world, it's more industry-led. But whether it's industry-led or government-led, we're seeing this movement towards easing the access of data and having customers consent behind this. So accessing the data has become slightly more available than it used to be. And of course, it's a crucial enabler to that data-driven engagement. What does it mean? I mean, open banking, it means that fundamentally everyone is having access to the same data set. So it's not possible for a financial institution anymore in a country or in a region where open banking has started to be rolled out to kind of consider that it is the only one having access to the information stored in its own internal core banking systems about its customer, and therefore will be the only one to be able to provide value to customers about that data. Now there's potentially the ability for multiple institutions, again, of course, with customers' consent, to provide a more holistic type of analysis, a 360-degree view to customers about where their money goes. Providing them with insights about their money in, money out, about any shortfall of cash, any kind of issues they might have with some products, any kind of education material. This is basically becoming available. So one of the questions which we hear quite a lot of financial institutions ask themselves in this context is, well, now if everyone is having access to the same data, how can we differentiate, particularly through our digital banking services, if every other institutions, every bank we're competing with is having access to the same data? So the answer to this is, of course, to use this data. And it brings us to the next point in this environment, which is really the realization that engaging customers online for financial institutions has become a crucial contributor to the bank's bottom line. It's well covered by analysts. This is a report which was covering specifically Asian banks, and which has very clearly, based on pretty broad surveys across the region, indicated that digitally active customers are more profitable customers for the bank. Measuring the number of products that they're subscribing to, measuring their profitability, and directly correlating this to customers that were particularly engaged and active through the digital channels exposed to them by the banks. Of course, this being possible only if the digital services exposed by those financial institutions are rich enough to engage customers. So the value of digital engagement is well covered by industry analysts, but it's not all. It's actually well covered by banks in the region in a growing manner. You have an example here of DBS, largest bank here in Singapore, which has actually started to cover the value of digital engagement since its 2018 annual report, and starting to really provide metrics around the benefits associated to digital customers. The fact that they are cheaper to serve, that the acquisition costs are also more affordable, and that there's consistently more revenue and growth coming out of those customers. So we have now open banking, which is rolled out in most of the jurisdictions, which is providing access to potentially broader data. We have also the value of digital engagement and this value of engagement, which comes through the precision of the information being delivered and therefore data, which are quite mainstream. Now, what is the solution and the tooling to address this? So I'm illustrating here with our solution, but it's something that we're seeing with a few other solution providers also addressing, is to actually put those Lego blocks together in order to create proactive engagement. And the techniques are, again, well known. We're talking about data analytics. We're talking about statistical models based on the data. What is relatively new is that we're also talking about the voice with which to deliver the output of the data analytics. And that's really where behavioral science shine. So combining those two skills is something that we're seeing more and more institutions combine in order to deliver that kind of engaging value to customers, powered by data, to create this kind of engagement. And a concept that we're seeing quite a lot is to provide them with insights, to provide them with recommendations to improve their finances and become better savers or better investors, better spenders as well at the same time, most of the time, and do this in a contextual manner, at the right time, in the context of a transaction which has triggered one of those particular bite-sized piece of advice. And of course, the concept of nudging, which is directly coming from the behavioral science space, which is around making this content accessible, desirable, and making sure that customers can achieve the recommendations which are presented to them. So technologies that are combining this with the broader set of data we have access to, thanks to open banking, are in our views one of the enablers to helping financial institutions reap the benefits of the value attached to digital engagement. Now, from a technical standpoint, it's very much working as a pipeline of data enrichment, right? So you get the multiple source of data, which are available here on the right-hand side. And these data, which can be pretty raw, the way it comes from a financial institution's core system or from the card schemes or from third parties and payment origination systems, is augmented, is stored, is augmented, and is then acted upon. So this constant stream of information which data processing engine can handle are the source of the trigger, which will then be used in order to create those enriched, proactive, and engaging experiences for customers. The way to deliver them to customers is the traditional channels, digital channels that are available already today. So where you're talking web-based internet banking, you're talking mobile banking, and you're talking conversational UI and chatbot as well. So this kind of data augmentation in the digital core, adding that extra layer of personalization over data feed is how this growing wave of systems are addressing these requirements for banks for better personalization and engagement with their clients. So how does it look like? Well, usually when we're seeing this being rolled out, the first level of proactive engagement is to provide more visibility to customers about where their money goes. And we see a lot of rollout of features that are basically enhancing existing functionality. Instead of having a homepage in your mobile banking app where you will see just a balance, you now see a few extra widgets, which are giving more perspective to the customers about where their money in and money out flows. You're seeing also potentially much richer transaction history, augmented with visual information about the source of the transactions, be it the logo of the biller or information about the merchants, about transaction auto-categorizations. So still very much an extra layer above existing capabilities. And then the same applies to letting customers set their budget alerts, letting specify their goals. So we're still talking here with this first set of capabilities about a layer, an overlay on top of existing functionalities. And most of the banks trying to address proactive digital engagement, we're seeing them start with this initial layer. Now, subsequently, you get more into the contextual, very proactive, personalized alerts. And this is an example here where we've detected a condition which deserves to be alerted to the customer immediately in real time from a transactions that they've just completed. In this particular case, they've shopped at a particular merchant. This has triggered a detection of a particular anomaly, in this case, variations. The customer does not need to have set up any budget or anything. This anomaly or these particular conditions which deserve to be presented is detected and is presented in a proactive manner to the customers with just information, or in some cases, call to actions. This is an example here where it's coupled with predictive insights as well, where we're trying to predict the future. In this particular case is a shortfall of cash flow for the customer. And as you can see in the middle, it's not just informational, they are also highly contextual call to actions which are provided to customers. Combining this ability to detect events that are relevant to the customer, that are in the context of what they've been doing, and to offer the action that they can take, in this particular case to save the day, is really where we see data-driven digital engagement to go these days. One part which should not be forgotten as well is the ability for customers to be able to provide their feedback. And even if it's as simple as letting them say, thumbs up, thumbs down, we like this piece of content, is already an important level of feedback to collect. But of course, enabling them to say, I don't want to see this again, is also something which should be embedded into all those insights and nudges which are generated for them. So the feedback loop, and now the financial institution is open to accept their customers' feedback, is also something in our experience which is subsequently driving even more engagement. Contextual marketing is actually part of this. It's important in our view not to provide only marketing content to customers, because we've seen firsthand our engagement is dropping extremely quickly. So we have to make sure that it's not exclusively ending in the hands of marketing, but it doesn't mean there should not be any marketing and any product information which is delivered to customers, as long as it is contextual, it is meaningful for them, and it's providing value. So you have here an example of a meaningful credit card which would have provided me cashbacks and discounts based on the patterns of my transactions. Another way which is extremely powerful to drive more engagement is to help customers achieve their goals. We've seen that with most of our clients, particularly in the last couple of years, helping customers save and helping customers achieve either short-term goals or long-term goals. You know, it could go from buying the next gadget to actually saving for the kids' university, but helping them detect when they have an opportunity to do an extra contribution to their goals in order to achieve them faster, like the example that you see here, or congratulating them when they are actually on a streak of contribution to their goals. So it's not only about negative messaging to tell them when they are struggling to actually, or they're not saving regularly enough. Of course, this can be delivered, but the positive reinforcement is also something which, again, in our experience, is driving significant engagement. We very often recommend savings goals as a great kind of story to create that engagement, because there's so much positive nudging in helping customers achieve their goal that it really deserves to be tried. Now, the new wave, beyond those highly contextual, bite-sized, and actionable pieces of content, which you have seen, is self-service automation, is to actually let customers be even more in control on their own actions, and to really have the ability to trigger and configure the automations that they want at the individual level on their particular finances. You see here some examples where they got not only a very granular and highly personal way to be alerted of their own transactions, but also how they want, in an extremely tailored way, contribute to their goals. And even how they want to contribute to their savings more massively by having, in this particular case, an auto sweep function. Letting customers configure and decide how and when they want to set their finances in a self-service manner on this kind of automation is, in our view, the next wave of proactive engagement, which can be triggered by data. Now, just to close on a few remarks and things that we've learned, some of them the hard way in some of our implementation, particularly when we talk about personalization and engagement, there are a number of ways it could go wrong. And we've learned a number of ways to do this right and to avoid certainly some pitfalls. So here it's our personal checklist, which we're happy to share always as much as possible, is the things that a financial institution should make sure it does when it delivers engaging content to customers. Make sure that the content is delivered in full transparency, that it's relevant to customers, that it's respectful of their privacy, that it leaves them under control. It's a point that I covered earlier with some of the example. They should be able to say no, stop. The content obviously needs to be fully localized, particularly important in a region like Asia, with multiple languages, multiple cultures, multiple seasonal approaches to managing finances as well. And the last 2 bullet points here are a little bit more specific to banking. There is an expectation from banks that they will help their customers be better at managing their finances. So there's an advisory expectation. And of course, there's a regulatory framework that financial institutions have to adhere to. All that together with when to personalize and when not to personalize. And really one of the things we've learned is that it's important to personalize only when you have good data. Open banking, as I was mentioning earlier, is an even better enabler. But good data also starts with the bank's own core data. And it's important to have that data being in a good shape to be consumed for use cases like what I was presenting today. You also need to have a good reason to start engaging to customers. It's not good enough for the bank to have a marketing campaign to personalize an experience to customer. It has really to add value to customers. That's something we've learned from the content that was driving most engagement with the end users. Don't do it too early in the relationship and don't do it too much as well. Because the primary reason why customers come and bank online is because they have a job to do. They have a bill to pay, they have a balance to check, they want to review their transaction history. This kind of proactive engagement should not be in the way of the job that they have to complete. So not too much as well. That's it for me. I'd be delighted to receive any questions that you have as well for this. It's an amazingly exciting topic. There's so much more that can be done around this theme of personalizing digital engagement. We'd love to hear your reviews. Thanks a lot.